Hi, I'm Sofia Song, Head of Research at StreetEasy. We're at the JW Marriott Essex House to talk with Peter Bazeli, a Senior Vice President with the national real estate consulting firm, the Weitzman Group. Based in New York, Peter consults on new developments across the country, and recent years has consulted on many of New York's highest profile new projects. So Peter, thank you so much for joining us.
My pleasure.
So let's talk about what happened this quarter. According to our Manhattan Condo Market Index, condo prices in Manhattan actually rose 9% since a year ago. And this is the highest that our index has been since the bubble burst in 2008. Do you expect current prices to exceed the 2008 peak? And if you do, when do you think that might happen?
I do. There's no doubt about it. This is New York City, and New York always comes back. New York is a very different place in terms of its marketability to the world than it was even a few years ago. It's really very much one of the global capital cities, and so it won't be too long is the answer. I anticipate that within the next year we'll have peak pricing again. I wouldn't be surprised if it was this fall.
Spring is typically the busiest time of the year for the real estate market. But this spring, we've seen the market hotter than before. We've seen a record number of 4,200 contracts signed in Manhattan this quarter. That's the highest number of contracts we've seen in StreetEasy. And this is actually a 22% increase since last quarter, but a 35% increase since a year ago. This surge in contract activity, it's greater than what we saw in the last boom. Does this surprise you?
It doesn't surprise me, and I think what's happened since that time is that there's even more confidence in the New York City real estate market than there has been in the past, both globally but also among New Yorkers and domestic purchasers that realize that we're really dealing with blue chip real estate here. There's only so much New York real estate, and there's so much demand for it, and so I think there's a lot of confidence that investing in New York makes a lot of sense.
While we've seen inventory still down 11% from last year, we've actually seen an increase in inventory for properties $3 million and above. So what's going on in terms of inventory for the middle segment of the market?
Sure, and middle class is relative. What we're really talking about is the middle of the market here. And there's almost no inventory available between $1 and $3 million, and even a little bit higher than that. It's still tough to find a $5 million apartment if you have specific criteria in mind for your family. And so I think one of the reasons that we're seeing sort of continuing upticks in pricing, and why I'm not really concerned about this level of inventory being dumped on the market, is because of the fact that really where the bread and butter of this market is, it's still very constrained. Most households in Manhattan really want to spend somewhere between $1 and $3 million, and so much of the new development that's been taking place in New York City over the last few years has been much higher than that on a total dollar price or a total chunk price basis. And there's been very little product that's actually been entering the market that's smaller in size.
What do you think we should expect to see for the rest of 2013?
I think we should expect to see continuing increases in price, continuing general constraints on available inventory. The resale market is pretty tight. There's a lot of new development coming online, but those are typically at much higher price points than the surrounding resale inventory. And so for the depth of the market, there's not a lot of product that will continue to be available for them in 2013. I think this fall is likely to see a lot of activity when people come back from the summer. The fall is going to be, I think, a real signal for what we should expect in 2014.
Thanks so much for watching, and be sure to check back for more StreetEasy videos featuring Peter Bazeli.